There seems to be a little bit of confusion about whether or not Social Security is still taxable or if that was changed. The bottom line is this bill did not change how Social Security is taxed at all. What led to this confusion? Well, first of all, you're always going to have a lot of misinformation flying around. There's several versions of the bill, right? Because as the bill was going through the House, as the bill was going through the Senate, things get changed all the time. And now we have the final bill, but you still have articles floating around about what was in some of the proposed bills. So that could be a piece of it. I don't know if anything related to taxability of Social Security was even in any of the draft bills or not. I don't really pay attention to them until they start to get really close to being passed. But I can tell you that in the final bill, the taxability of Social Security was not changed at all. So what did happen, and why are people saying that the tax on Social Security is now lower or gone away? Well, first of all, there was an email from the Social Security Administration. Let's take a look at that. I got this email in my personal email inbox as well, and this is very misleading. I'm not going to speculate on whether or not this is intentional or not because I really don't care. It's just a matter of the fact that the information is wrong. I think that they should send out a correction because it's confused a lot of people. But here is the email from the Social Security Administration that I got on July 4th at 1:30 a.m. apparently. The Social Security Administration applauds the passage of legislation. Okay. Again, get political however you want. That's not what the point of this video is. This video is just to help you understand what the actual taxes are. So no political commentary here. The bill ensures that nearly 90% of Social Security beneficiaries will no longer pay federal income taxes on their benefit. That could be an interpretation because of what the bill did do. We'll get into that in a minute, but basically the bill gave a new deduction to seniors age 65 and older. And so you could say, well, because seniors 65 and older are receiving Social Security, generally, this new deduction ensures that 90% of those beneficiaries will no longer pay federal income tax on their benefits. That's a weird interpretation. It's a misleading interpretation, but I could see that, okay? But then if we keep going, it says, by significantly reducing the tax burden on benefits. Again, super misleading. They didn't change the tax on the benefits. They added a different deduction that you get if you're 65 and older. The new law includes a provision that eliminates federal income taxes on Social Security benefits for most beneficiaries. What doesn't eliminate federal income tax on Social Security? Social Security is still taxable just like it always was. And there's a calculation to figure out how much of that is taxable from 0 up to 85% of it could be subject to income tax at your income tax rate. That didn't change at all. So there's no provision eliminating federal income tax on Social Security benefits. Again, you could kind of get there if you want to interpret it in this very interesting way. And then it says, additionally, it provides an enhanced deduction for taxpayers age 65 and older. Now, that's where it gets super confusing and misleading because the enhanced deduction for taxpayers 65 and older, it's not in addition to anything they said before. What they said before was that it eliminates, did they say eliminates? They said, yeah, it eliminates federal income taxes on Social Security benefits for most beneficiaries. And then they say, additionally, there's this extra deduction. That's just flat out wrong, okay? There is no additionally in this because it didn't change the taxability of Social Security. So let's look at what the bill actually says. This is section 70103, termination of deduction for personal exemptions. Now, if you remember pre-2018, before the Tax Cuts and Jobs Act, we used to have personal exemptions. There was the standard or itemized deduction, and then there were personal exemptions. If I remember correctly, there were $4,000 per person in the last year that we had those. It was another amount that you could subtract off of your taxable income. It wasn't the standard or itemized deduction. It wasn't above the line deductions like a contribution to a IRA that's tax deductible, but it was personal exemptions, and it came after all of that, and it reduced what income you pay taxes on. Well, those were eliminated temporarily under the Tax Cuts and Jobs Act, and now under Section 70103, they have been removed completely. So personal exemptions are not coming back. They have been permanently removed, Within this same section of the bill, we add this deduction for seniors. So this is before January 1, 2029, which means that this provision does expire. And it is a deduction in the amount equal to $6,000 for each qualified individual. Now, a qualified individual is a taxpayer who has attained the age 65 before the close of the taxable year. In case of a joint return, the taxpayer's spouse, if they have attained the age of 65 before the close of the year. Basically, we have a deduction. It sits kind of in the space of where these personal exemptions used to. It's not part of your standardized or itemized deductions. It's not an above-the-line deduction, which means it does not reduce your adjusted gross income. Now, that's important because a lot of other calculations and factors are based on adjusted gross income, but it does not affect that either. It comes in after those things, and it's an extra $6,000 per spouse who has reached the age 65. So if you are 65 or older by the end of the year, you can get this extra $6,000 deduction that reduces the amount of income that you have to pay tax on. It does not matter if you get Social Security or not. If you've delayed your Social Security and you have not started taking Social Security, you still get this deduction if you are a qualified person under the new law. There is an income limit. So for single taxpayers, if your AGI exceeds $75,000, for married taxpayers, if it exceeds $150,000, then it starts to phase out. Let's say you have to have a Social Security number as well. And for married individuals, you have to file a joint return. This is an extra deduction. It's going to reduce the taxable income, the amount of income that you pay tax on. If you're age 65 and older and you qualify because of the income limits and having the Social Security number and all that, then okay, you could say, okay, well, that reduces the tax burden on Social Security benefits. But that's just a weird interpretation because it has nothing to do with Social Security benefits. Again, like I said, if you're not taking your Social Security benefits, maybe you've delayed those, right? You're 67, but you haven't started taking Social Security yet, you still get this extra deduction. 2029, under this tax law, it would go away. You would not get that anymore. So it's a temporary deduction that you get. It's not connected to Social Security at all. The bill doesn't change the taxability of Social Security anywhere else. So on your tax return, your Social Security benefits are still going to go on there. You're still going to include in your taxable income 0 up to 85% of your Social Security benefits in the calculation of taxable income. And then there'll be this extra deduction if you're 65 or older that you can subtract off of your income that you don't have to pay income tax on. So in short, they didn't change taxability of Social Security at all. It's not, Social Security is now tax-free. The calculation for what portion of your Social Security income goes into the calculation of your taxable income is exactly the same. There is a new personal exemption technically, but we can call it a deduction. It reduces the amount of income that you're going to pay tax on. So there's this new deduction of $6,000 per taxpayer who is age 65 or older. So if you're single, you're $6,000. If you're married and you're both over 65 or older, then you will get $12,000. If one of you is 65 or older and the other is younger than 65, then you'll only get the $6,000. So if you have any questions, just feel free to reach out or post comment and let me know. But that is how the new bill is treating Social Security. Didn't change that at all. Added a new deduction for taxpayers age 65 or older, whether they're taking Social Security or not. Thanks for watching.